From time to time, Mr. Market can act somewhat irrational. For example, earlier this week, one of the companies that we follow on this channel saw a 10% drop on the news that they refused a buyout that was higher than what the price was prior to the drop. What this tells me is that management refused to be acquired on the grounds that the company is, or will be, worth more than it currently is now. In this video, let's take a look at the growth that the company is expecting going forward and what kind of discount that the share price is currently at. My name is Scott. Welcome to the channel. Let's talk Shift4. So to get things started, let's hop over to the spreadsheet. The general structure here is broken into three distinct sections. The first part is everything you'd expect in a company's earnings. We have the income statement, the balance sheet, and the cash flow statement. This next section, think of this as a calculator and formula section. This takes the reported numbers from above and looks for relationships between the numbers and gives us an idea of what to expect for forward values. What I mean by this is we'll use the example of revenue growth and we'll use the example of cost of goods sold as a percentage of revenue. So let's start with the revenue. This particular example doesn't use the past values. For revenue, we're going to assume growth rate of 30% going forward. This is something that we'll come back to, but for the time being, let's just lock that in, 30% going forward. You'll notice that it is over in the multiplier section. Any of these dark gray cells, these are the ones that are going to change the overall valuation model. These are all fed to the section above. For this example, you'll notice that this number right here, cell AE 135, is being referenced up here in the multiplier column for the total gross revenue for Shift4. Scrolling back down to the bottom, the next number that we'll look at is the cost of goods sold as a percentage of revenue. So if we look at the past examples that we do have available, you'll notice that these cells are taking the cost of goods sold, dividing it by the revenue. From there, over in the multiplier column, you'll notice that this particular example, we're using these 8 cells, using the average of those 8 cells, 75%. So we have the revenue, and now we have the cost of goods sold as a percentage of revenue. So again, we're going to hop back up and take a look at what we're seeing so far. So again, this current cell, AE 136, this is the average of the cost of goods sold as a percentage of revenue. We're able to find this cell right here, which as we see is referencing the one from below and giving us that cost of sales as a percentage of the revenue. So from there, we have the gross income and the gross margin. Now to expedite this process, that first example that we just went over, the revenue and the cost of goods sold, this gives an idea for overall how this second section is working. It's basically taking the past data, finding relationships, and applying it to the forward values to give us an idea of what to expect going forward. So the third and final section, this is where formulas are used to arrive at an expected share price. So we're going to put a pin in this for the time being, and then we'll circle back in a few minutes. For now, let's start with the guidance that was issued for full year 2024. Shift4 generally guides for end-to-end payment volume, gross revenue less network fees, adjusted EBITDA, and adjusted free cash flow, or adjusted free cash flow conversion, which simply put is adjusted free cash flow divided by adjusted EBITDA. So before we take this guidance at face value, we first need to compare with past guidance to decipher, is management accountable? So we're going to scroll back up to the first section to the most recent data that we have available. We're going to start up top and we're going to zoom all the way out. Now you'll notice that there's a few different color varieties for the cells up above. We got yellow. This is stuff that's been guided for that hasn't come to fruition yet, obviously, because we're out in 2024. And these past values, the orange, green, sometimes gray, and I don't think we have any red. These are all indicators if management has met, exceeded, coming close to meeting those guidance ranges. So, for example, end-to-end payment volume for 2023 quarter 4. We click on this, we can see the history of what they've guided for and ultimately what they actually arrived at. So in this case, they started with 100 to 109 billion. They guided up a little bit over time. So they beat the initial guidance just by a hair and they stayed within the guidance range overall. So there's no red flags, there's no misses here, there's no concerns. An example of one of the orange ones, however, they guided for 915 to 955, brought that up a little bit, but ultimately had to snap that down again. So they did land within the original range, but throughout the year they did guide it up and then it ended up coming back down. Now, the reason that they weren't able to meet this guidance is because there was a few things that were pushed into 2024, nothing major. So this one, I wouldn't call this a red flag, wouldn't call this a green, so this is just an orange. Now, of the colored cells here, Shift4 generally meets, if not exceeds, guidance. There's a couple orange flags here. This gray one here, this just means that they fell within it. But generally, things are looking pretty good as far as meeting, if not beating, guidance. What all of these green cells tell me is that management has a track record for being generally accountable when it comes to providing guidance. As a result, I feel comfortable using the guidance that they just provided for full year 2024, and we can model based around that. And to make things interesting, we'll also push these growth rates out by an additional year to give a not so short-term outlook on what we can expect through to the end of 2025, assuming that the growth rates remain constant. So with the numbers now populated out to 2025, we can circle back to the share price section and take a look at what kind of share price can be expected for the end of 2025. What I'm tracking for Shift4, again, this is not financial advice, this is just a bunch of numbers working together, but I'm estimating a share price of $120 by the end of 2025, assuming that all these growth rates and everything continues to head in the same trajectory that it's on now. But before we get ahead of ourselves, let's compare our results to Wall Street's. As of the time of recording, Shift4 is covered by 16 to 20 analysts. What we're going to do is we're going to take the revenue, earnings, growth estimates, and price targets and park these numbers on the side of the screen and compare against the numbers that we're arriving at ourselves. So starting with Q1 revenue, Wall Street is expecting $756.4 million. We're at 711.1, so we're way under. For Q2, 916.4 million, we're at 828.1. Again, way under. For full year 2024, they're expecting $3.73 billion. We're at 3.33. For 2025, they're expecting 4.73. We're at 4.33. So for revenue, we're shooting under for each of these time frames. Let's go to earnings. I'm a little unclear if Wall Street is going with the general earnings per share or the attributable earnings per share. Either way, you'll see, again, we are way bearish on this compared to what Wall Street is. So Wall Street for Q1 2024 is at 0.7. We're at 0.5 for the general EPS. For Q2, 0.9 for Wall Street, 0.64 for us. For the full year 2024, 3.7 for Wall Street, 2.56 for us. And for full year 2025, 4.75 compared to 3.24. Taking that a step further and also circling back to that initial revenue growth expectation, 30% sounds pretty high for the revenue growth. Until you look at what Wall Street's expecting, 49% over the next 5 years. So again, way under, and way under. Now for the price target, my understanding is that this is for 12 months out, that $91.41. So what we're going to look at is, we're roughly within that range. I'm a little unclear about the time horizon, but all in all, you'll see we're bearish on top of bearish on top of bearish. So putting this all together, I thought I was being a bull on Shift4, and then I saw what the market's expecting, and maybe I'm not so bullish after all. So if I'm right about Shift4, great. And if I'm wrong about Shift4, it seems like that's even better. But I'd love to know what you guys think. Leave a comment below, and be sure to check out the Patreon to view and download the valuation models that I referenced to make these videos here for you. Thank you guys for the hangout. I'll see you in the next one. Have an awesome day. Peace.